Hi, this is Andrew Sears. I'm the president of City Vision University, and I'm here with Denise Henning. Denise is the head of Stewardship Matters, and she is a CPA, and she has worked with 25 to 30 nonprofits over her 30-year career in accounting, and she works as a consultant to nonprofits, particularly around nonprofit accounting. And what we like to do in our courses is we like our courses to be as practical as possible, have people have hands-on experience. So she's had this experience from all of her, working with clients, and she's going to be bringing that into some of the course material. She's helped provide input into some of the course design, and she's going to give an overview of week one. So Denise.
Thanks, Andrew. So our first lesson one, is going to be a nonprofit structure and accounting process. And the targets that we have to help you understand this week is we want you to understand the difference between a public and private charity. There's going to be two different bottom lines that you're going to learn about in the reading. We want you to be able to differentiate between the different types of organizations, whether it's a for-profit, nonprofit, or government. And we're also going to talk about the financial statements and who the users are and what those users might be focusing on as they read your statements. We'll talk about the process used in accounting to create those financial statements. You're going to learn about generally accepted accounting principles, or GAAP, and FASB, the Financial Accounting Standards Board, and the purpose for their existence. We'll talk about the 4 drivers of accounting principles, and we'll also just go through the basic financial statements so you can understand what they're about. Also, during this week, we want to let you know that you will be choosing an organization. We'll have you going out on GuideStar that you will be using for future assignments, and your faculty will be guiding you through that during week one.
Now, in many cases for the students, you'll also just be using your own organization, provided it meets the requirements. But you can also get, if you're unable to access the financial statements, usually they're available on GuideStar. So thanks.
So one of the things that can be challenging when we're taking nonprofit financial classes, there's a lot of intermingling of terminology between for-profit and nonprofit accounting. And you're going to find throughout this course that these terms are going to be used interchangeably. But we really like you to know the nonprofit correct terminology according to general accepted accounting principles. For example, the net worth of a company or equity is what you would call it in a for-profit. That's what the shareholders might have or own. But in a nonprofit, they're not owned by anybody. So we talk about net assets or fund balances. For-profits talk about net income, and we'll talk about either change in net assets or revenue over expenses. For-profits refer to the money that comes in as income. Nonprofits would prefer to refer to that as revenue. Then it doesn't seem like it's tax-based. And they do the same thing with gross income, or prefer to calling it gross revenue. On the next slide, we're going to show, here's where you will see even more interchange, which is the differences between the names of the financial statements. You're going to find that not-for-profits will use the for-profit names. You're going to find these names throughout the course. You're going to see balance sheet, but really in a nonprofit world and on an audited financial statement, you'll see it says statement of financial position. Then the income statement in a for-profit world is really the statement of activity in the nonprofit. Statement of cash flows is the same. The statement of shareholders' equity, which is their earnings and dividends and all of that, really is called the change in net assets. And we'll be talking about net assets and fund balances, but that's similar to equity. And then the new statement that you'll be introduced to is the statement of functional expenses. This is a required statement for all nonprofits who have audits or compilations or review, and it's basically a breakdown of expenses between programs, management in general, and fundraising. You may want to keep these 2 slides handy as you go throughout the course, because you're going to find that one video may just use the word balance sheet or income statement throughout it, and another one might use statement of financial position or statement of activity. So it might be good just to have these handy as you're going throughout the course so you understand exactly what financial statement they're referring to.
Yeah, I've found that these translations are also helpful, depending if you're working with an accounting system. Sometimes your accounting system will use the nonprofit terminology, and sometimes it'll use the for-profit. So like in QuickBooks, often it'll call it the balance sheet report or income statement report, unless you have a special edition that supports the nonprofit naming. So I think that,
That's
that
correct,
can be
Andrew.
helpful.
Yes, that is. So a couple of updates that I'd like to share with you from the Harvard video that you're going to be watching in the first week is he refers to, it was taped in 2016, and he refers to temporarily restricted and permanently restricted net assets. And he states that they were considering a change. The FASB was considering changing the terminology, and they did change it after the video was recorded. So now the fund balances are called net assets with donor restrictions, which are unrestricted, or they're net assets without donor restrictions, which are now the unrestricted assets. The other large change that was made is they've added a number of notes to the financial statements. And the biggest note, the biggest one of importance for a lot of nonprofits is the one where they're looking at liquidity and they're looking at the reporting on whether they think that you're going to make it through the next year or not, with the cash reserves you have on hand and how liquid your assets are. We're not going to be addressing the footnotes during this class. I just thought it would be nice for you to, if you see that or have a set of financials, just for you to know that those are some of the changes they made.
Okay, well, thanks a lot, Denise.